Indeed, we have a deal at last. Yes, there's a deal that's been arrived at. It's fairly complicated because there are huge sums of money at stake. Some of the very clear and very important figures that have emerged till now is an asset monetization fund that Greece will have to set up. It'll have to monetize certain state assets. They haven't clarified what those assets would be. But the target is that that fund will generate 50 billion euros in terms of its total fund size. It will be headquartered in Greece. In return, the Eurogroup is promising to infuse about 25 billion euros of capital in these Greek banks. We're seeing a massive relief rally play out pretty much across Europe. If you check how the indices are doing, we've got a rally between 0.5%, about 1 or 1.25%, depending on which core index you're picking out. There is a move as expected from bonds to equity, so therefore the yields have started hardening up. The last time I checked the 10-year German yield, we were looking at a figure of above 0.94. So that's pretty much how the situation is. The euro has rallied. It's playing along expected lines. There's a massive move on the currency, above 1.11 on the euro as well. And of course, India has perked up, joining in that global cheer, because it appears that there is a deal. Of course, it has to go through legislation in a lot of different parliaments, not just in the Greek parliament, but a lot of other EU member countries will have to legislate new laws to enact this deal, to let the program start to play out. I think we've got Jan Dehn joining us on the phone line from Ashmore. Jan, are you happy? Does this look like a convincing deal that's going to last and bring some stability to the markets?
I think it's going to keep the issue of Greece on investors' radar screens for a protracted period of time, because it is a multi-stage program that involves first changing the government and passing serious reforms by Wednesday of this week. That will then release some bridge financing. Once that has been released, then there will then be serious talks for a proper ESM program. Greece then has to pass more reforms, and finally, sometime in September, we get the full program. There are still question marks about whether that involves some kind of debt relief once this program has been established or not. If it does not involve debt relief, then I think Greece's debt is still going to be unsustainable, and the issue of Greece will only disappear from the radar screens post-September for a limited period of time before it comes back again. So, but those details are not yet clear.
Jan, is it at least clear that there is no Brexit immediately, and therefore will markets for the moment cheer?
Yes, absolutely. This is positive news in at least two regards. First of all, they actually got a deal, and secondly, there is talk that this deal might involve dealing with the issue of bank recapitalization in Greece. Again, the details are pretty scarce now, but that was an issue that has been weighing on the market. People have been saying, hey, wait a minute, the banks need money as well. Where's that going to come from? So it looks like they might try to deal with this bank issue through asset sales. If they've reached agreement on that, that's certainly positive. Now, the attention is now going to focus back to Greece, where Greece has to essentially pass some reforms that are pretty draconian, and it has to do it by Wednesday in order to trigger bridge financing. So, but it is clearly positive, but it doesn't make the issue go away.
Jan, the next important deadline was another impending payment, and one which was due to the ECB this time around. I think July 20 was the date, if my memory serves me right. Do you think what you've heard so far, all this commentary that's come in the last hour and a half or so, gives you clarity that won't be yet another cliff, that Greece will be able to smoothly tide over that payment, which is due on the 20th of July, or which was at least due on the 20th?
We will know that for sure on Wednesday. If Greece, if Tsipras has managed to pass the preliminary reforms required by Wednesday, then he will be receiving a bridge financing loan from the Troika that will enable him to service the debt on the 20th of July. So we'll know on Wednesday.
Okay. Do stay on with us, Jan. We've got other guests as well joining us. Michael Avery of Rabobank is also with us. Michael, what does this immediately mean? Do you think the euro goes up? Do you think people start short covering European stocks? As an investor or as a trader, how will you move?
Well, I think we're going to get a little bit of volatility, because initially you might get a knee-jerk response of it feeling like it's good news. But obviously there's still a lot of uncertainty out there. We still have a lot of looming deadlines day by day by day. And beyond that, even if we do put the issue comfortably behind us and say, okay, that's it, Greece is done, or at least the can has been kicked down the road for another 6 months or 12 months, which in reality is maybe all we've managed to achieve here. The focus will then immediately shift back to Wednesday and Janet Yellen when she's speaking. And if she hasn't got to worry about Greece, maybe that makes her a little bit more likely to be hawkish, which is going to help the dollar and not help the euro.
Okay. It appears that there has been a bank recapitalization agreement also that has been reached. I read the word 25 billion somewhere, but I'm not able to put my finger on what exactly the headline is. But there is the Brussels Greek PM, I think it's Tsipras, saying that we have prevented the banking system from being choked. So you think, therefore, that there is at least no contagion for now, that later rather than sooner the Greek banks will start functioning normally?
Well, provided the Greeks are still playing along with what the creditors want, the creditors will tell the ECB to take their foot off the Greek banks' throats. So yes, basically a crisis has been averted purely because Greece appears to be signing up to the most harshest possible austerity terms. Prime Minister Tsipras has just announced that recession is now inevitable. Well, I think Greece is already in recession. It's actually arguably been in depression on and off for the past couple of years, and we're going to have another down leg now. So all we can hope is that against that very bad backdrop, that actually enough cash can be repaid or raised to actually repay the creditors. Otherwise, all we've done is to basically make the situation worse.
Jan, if I could just come in over here, I mean, I totally get your point that a lot of this depends on whether Greece can muster up the political numbers and get that legislation passed to get bridge financing, which is so crucial, by Wednesday. I know this is bordering on, now political guesstimates, but do you think Mr. Tsipras will be able to sell this deal convincingly to his own people? How do you see sort of reactions here? Because the euro, I mean, I'm just looking at the way the currency market is reading this. The euro initially moved higher. There was a big spike. Now it's, kind of undoing some of those early gains. It's back to about 1.11. How should we read what has been announced today?
Well, I think 2 points. Tsipras doesn't have to pass this by the Greek people, at least not immediately. He has to pass it through the Greek parliament. And I think he has to support in parliament, so I think he will succeed in doing that. Now, whether the people will then, appreciate that remains to be seen. That's why it's so important whether we are going to get further debt relief or some kind of restructuring further down the line, because then he can sort of say, well, look, we're doing this in order to ultimately get onto a sustainable path. As far as the euro is concerned, it's not really moving around a lot. But, of course, one of the implications of a deal in Greece is that there may not need to be a major asset purchase program being unleashed by the ECB in order to contain contagion in the rest of Europe. And if that's the case, then that could actually be negative for the euro, because what has tended to happen in the past is that when you do have these big asset purchase programs, then investors have been jumping on that bandwagon along with the central banks and driving up their valuations.
François Hollande is speaking, so let's hear out the French PM.
Which started in the aftermath of...
Definitely going to be capitalized, and it could be a 25 billion over there. While Tsipras mentions a $35 billion package immediately, François Hollande clearly referred to an $80 billion package as well. So I guess there are, there is a
different numbers that are, I guess, doing the rounds. But Lata, the commentary that came in from Ms. Merkel, as usual, ended up being far more straightforward. I think she's very clearly stated that in that 50 billion euro fund, among other assets, banks which are being recapitalized, once they become, fit and proper again, perhaps they'll have to be sold out to generate some money.
Yes, asset monetization is clearly something they're all demanding. And Hollande mentioned that as make Greece more productive. So perhaps the idea is that you allow more private sector participation and therefore make them more competitive, more market worthy. Those seem to be the considerations. We still have Jan Dehn with us, and we will have a few more guests in a bit. Jan, do the Greeks have a choice if Tsipras, a leftist leader, with so much populist backing, has agreed to these conditions? Is there any question of the Greek parliament not passing these? We should now accept this plan as something that will go through, can we?
He does have the votes in parliament. He should be able to pass it. I think it's a very clear choice here. Implicit in this agreement is that if Greece doesn't go ahead and pass these reforms, it will be temporarily suspended from the euro, and who knows how long that'll be. And there's a very, very strong support in Greece for staying within the euro. So I think whereas the referendum was a little bit unclear what exactly people were voting for, and I think Greeks just assumed that they were voting for or against austerity, I think now it becomes more clear. You pass these reforms or you're in effect voting against euro membership. So, but again, the people are not being asked. It's Parliament that's being asked now. The people's response will then come in the next election when we'll see how they regard these decisions.
Absolutely. Well, Andrew Holland of Ambit Investment Advisory has also joined us. Andrew, you must have got a broad sketch of what was agreed to. It appears there's no Grexit, and it appears now Greece will have to pass a bunch of laws, and they will have the money. What does it mean for you as an investor?
Well, if you remember last time when we had your Sunday show, I didn't think there would be a Greece exit anyway. So no real surprise there. Obviously, the devil's in the detail in terms of what Greece has to do and what they have to, how they're going to repay. So I think we're just getting a relief rally at the moment. But I'm still of the view that kicking the can down the road is okay. It gets us around the problem in the short term, but there's still a lot of restructuring that Greece has to do. I'm sure there's going to be elections called pretty quickly. So Greece is not going to go away from us, I'm afraid.
If I could just point out what the currency market is doing, and I know Andrew follows the currency and the bond markets in as much detail as he follows the equity. The euro is actually down on my screen. It's showing down almost 1%. That's a very swift reversal that's come in from the common currency. Take a look at that. It rallied almost to 1.12. Did a U-turn, and in a matter of half an hour, the pictures changed quite dramatically on the euro-dollar. So I just want to ask both our guests, Jan, as I throw this open to you, I'm quoting a statement that's come in from the Greek Prime Minister. Of course, he's been trying to sell this deal, saying that it's a 35 billion euro growth package, plus there is restructuring. It is a deal that will put Greece back on track. Whether you agree with that kind of conviction, is it indeed such a clear deal? And then just your quick take on the very swift reaction we're getting in the currency market on this.
Yeah, two very quick answers to those. We don't yet know whether this is a sustainable deal for Greece because we don't yet know whether it involves substantial debt relief. And it does need to do that. Greece needs to have at least 100% of GDP lower debt in order to be sustainable, in my opinion. Of course, you can achieve that with a massive restructuring of the debt where you push the liabilities into the future. Then you don't have a haircut, but the NPV value drops dramatically. So the details, we still need to see those with respect to the structure of the debt. With respect to the euro, I think it's very, very clear why the euro declines. A deal with Greece makes a massive increase in asset purchases by the ECB less likely, and that means that there will be less buying of euro-denominated assets than would have been otherwise. So I think that's why the euro is going down.
Okay. Jan, thank you very much actually for joining us with your quick take. Andrew, just stay on with us for 1 minute more. There is news coming in that Sun TV has got some interim relief from the Supreme Court. The Supreme Court has told the ED that it should not be attaching Sun TV's 14,000 crore worth of assets till the 25th of July. So at the moment, the Enforcement Directorate has been restrained from attaching Sun TV's assets. The next date of hearing is July 25th, so Sun TV gets relief until then. That's a separate piece of news. But Andrew, does all this mean that, at least from an Indian point of view, we should not be expecting too much of liquidity outflow, either because of Greece or China at the moment? Do you think there is some temporary piece that we have bought and therefore probably 8,000 or thereabouts is a bottom for this market?
I think we bought
Yeah. Andrew, if you could repeat that, we just lost you for a few words.
Yeah, I think we bought peace for maybe a couple of days. But I do expect that volatility will remain. Let's think about it. We've got the US, the Fed will probably now, if all of these Greece proposals are voted through Parliament, then they do have the opportunity then to increase rates in September. So that's going to bring more volatility. You're going to get the euro trading probably towards 105. And then China, I don't think those problems have gone away from China. I still think it's an economic problem, not just a market.
Okay, Andrew, what about the euro itself? Surabhi was just explaining to you that there was a spike in the euro and then we saw a sell-off coming in the euro. Do you think the euro is at least going to stabilize because its existence is not being questioned now? Okay, we have him on a bad line for sure.
And Andrew, can you hear us? I think it's a bad line. We'll have to patch Andrew once again. But that's the story so far, in case you've missed the headlines. Yes, there is a deal. The next couple of hours, next 24 to 48 hours, I suppose, very, very crucial, as the Greek Prime Minister has to go and get approval from the Greek Parliament, not the people this time around. He has majority in Parliament, as Jan was explaining to us. That shouldn't be much of a problem. Once this goes through Parliament, then the actual initializing of the deal begins, where there is an aspect of bridge financing that comes in. Then, of course, the talk of creating a 50 billion euro fund by Greece that will monetize state assets, including Greek banks, which will be recapitalized as part of the deal itself. So once they become fit and proper and they become, a little more healthy in terms of their financial health and restructuring, then Greece is to try and sell off some of these assets, including its own state-run banks, to generate a fund that will have a corpus of at least 50 billion euros. So that's what's being spoken about. And then, of course, there is a 35 billion euro package which is to help Greece tide over the interim period. I think we've got Andrew back. Andrew, we were trying to ask you about your own thoughts on the way the currency market is reading all the announcements, with the euro now falling almost 0.9%.
So I think people saw that if Greece was an exit, then it'd be a stronger Europe, and now obviously with Greece back in, it's going to be a weaker Europe. So if the Fed increases rates, which we expect them to do, then the euro is probably going to 105.
Actually, there could be some statement over here from the Finnish Prime Minister, who has from the start been a hawk and not wanting to let Greece get away with whatever they ask. The statement coming from him is his government will carefully evaluate if new Greek proposals are sufficient for ESM negotiations. The European Stability Mechanism will have to kick in as the first bout of money that will come so that Greek banks can survive. Those ESM negotiations will start only after they evaluate the new Greek proposal. So they're waiting for the Greek laws itself to be passed. Andrew, I think the point is really taken that this is going to be a two-day piece, and then we will start getting bombarded by headlines. Are you getting a sense, at least from an Indian investor's point of view, that this will remain noise, and that every time the Indian markets dip because of Greek headlines, that would be an opportunity to buy?
Yeah, I think by and large, Greece is less of a worry to me. But I still want to see the detail, lads, because I really have to see what the Greece is facing going forward, and how much the European Union is going to support them. That said, I think China remains the worry part for me, as well as Fed rate hikes, because I think these have a much more bigger impact on the global economy and markets than the Greece exit or staying in the euro will have. So those are the two trigger points for me now for the next couple of months.
Okay, just want to point out we're getting some commentary from our own Finance Secretary as well, who's saying that the RBI is monitoring a spike in government bond yields and will be taking appropriate steps. That's interesting. Let's get our own 10-year yield on the screens. On my screen it's at 7.86. I don't know
this was a spike. This is because on Friday evening they announced that they're going to sell bonds.
Right, the OMO that
the RBI has been faced with some excess cash with banks, probably because of its buying of dollars. There is excess rupees in the system, and that was coming into the RBI coffers in the reverse repo auctions. I think they waited for a week, and they found the banks continuing to apply in the reverse repo window. This bond sale was announced on, and today the 10-year opened at 7.9, which is always a sentiment negative, and that's what Mr. Mehrishi is referring to. Well, actually, why don't we listen to the Finance Secretary Rajiv Mehrishi, and we're getting back to Andrew in just a minute.
If there was any adverse impact, which is impossible to quantify, then if there's a positive impact also, that is also impossible to quantify. Why the markets are reacting that way, I told you last time also, that markets work on sentiments. It is impossible to say what they are reacting to, what they are not reacting to. Our exports are basically impacted by hardening of the rupee vis-a-vis the euro.
Yeah.
So if euro doesn't sort of depreciate much, then our imports will be okay. Our exports will be okay. So our rupee shouldn't harden. In the last 1 year, it's been hardening against the euro.
All right, so those are two pieces, the Greece impact, hard to quantify, but it is good news for the moment, and as well, some statements coming on the divestment plan, saying the market is in a fine spot, and a little bit of worry that bond yields spiked, and that the RBI will be inquiring into it. This could be actually talking down the yields more than anything else. What will you investigate, I wonder, but it would definitely send a shudder around debt dealing rooms for sure. Okay, Andrew, last thoughts. At the moment you said you would watch out for RBI action and for earnings. Are you expecting a rate cut in August?
It depends really on the monsoons. If they're going to be where they are today, then definitely I'm still looking at 50 basis points. Around August, September. So that's still doable, I think, by the RBI governor.
Yeah. Andrew, since you're with us, I'm just, turning away from Greece for a bit to talk about our own market because we haven't brought the viewers up to speed with what's been happening. It's a 1% rally. It's largely driven and triggered by what we've got from the West in terms of cues. But it's a very well mixed up rally as well. A lot of parts of the market are moving higher. The Bank Nifty is up about 0.7%. FMCG and pharma stocks, so there's a bit of a defensive tone to this rally as well. At the same time, IT is having a fantastic session today. In fact, just to talk about some of the IT big boys, HCL Tech 3.5%, Wipro, TCS, Infosys, gains between 1 and 3.5%. So Andrew, before we let you go, just your sense, and IT has been such a big news point right after the TCS results. The profit warnings we got heading into this earnings season, the rupee as it stands today. What's your view on the sector, the rally that's playing out today, and how you'd rate it?
Yeah, I would sell into this tech rally. I think the decade of growth is over for them. I'm not going to invest in the tech sector whatsoever for a long time to come until I start to see growth at the top line. And whether Greece is in there or not, I don't think it helps the overall industry. So I would sell into this. It's just a relief rally all around, which I think most people will sell into as the day wears on.
All right, Andrew, we'll leave it on that. No, thank you so much for joining us and sharing us some perspective on all that's happened in the last hour and a half or so. Manish Singh of Crossbridge Capital also joins in on the line from London. So Manish, there is a deal. It has several components to it. Your first thoughts?
Well, I think first thought it's positive in the sense that it would have been tragic if there was no deal after the weekend of conversation. So yes, it's positive. The second thing is that the big question was always about will the Greek banks open, and I think that question is almost answered given that the banks are going to get recapitalized. That's the positive thing again, because remember the implications of not getting the Greek banks open would be catastrophic for the Greek economy. So I think that's a positive news once again. Now the third thing about will the Greek Parliament be able to pass it? I think probably it will, because the referendum pretty much gave a mandate to Tsipras to go ahead and negotiate as he wishes. And as we saw 2 days ago as well, even though there was slight split in his party, he managed to get support from New Democracy and PASOK. So probably that's a good thing as well. But to me, the most important thing is that there's no talk about debt relief. And if there's no talk about debt relief, then Brexit is always on the table, even if that has been papered over by the short-term deal. So that is one thing I would watch out for going forward, that do they talk about debt relief and when does that come?
No, they haven't talked about debt relief. In fact, if I remember right, I saw something about haircuts not being taken at this point in time, or what they call write-downs, was something which I think Germany quite clearly rejected at this point in time. So that's not happening, Manish. So you think that till all the parliaments agree and till the Greek parliament passes the required legislation, we are still going to be in ICU in terms of markets throwing bombshells at any point in time?
Possibly, though I think the chances are reduced. Okay. And also remember, first the Greek Parliament has to pass it before everyone else passes it.
Yes.
So as soon as it is passed in the Greek Parliament, given that this deal was given by the Eurogroup to Greek Parliament, I'm hoping that other national parliaments will pass it very easily. So what we have to look for is the Greek Parliament vote, really.
Okay, and how would you play the euro now? Will you see more weakness?
See, my view has been that, euro will hold on, and we've had this discussion before, and my belief is based on two facts. First is that the European economy data is much better than people are led to believe, given what is happening in Greece. And second, no matter what happens in Greece, I believe that the German 10-year bull yields are going to rise. And if that rises, the interest rate differential between US Treasury and the German bull yield comes down, and that is going to help the euro. So these are my two bases of why I think that, the euro is going to remain where it is, if not stronger.
Okay. Well, there it is. Already you're seeing a 4.5% rise in German bonds. One would have thought. Okay, at the moment it's a rise in German yields, and I think you're seeing yields of all the peripheral countries fall. So there is a bit of risk buying that's happening. You're seeing risk assets, both equity and debt of the peripheral countries. There it is, the 10-year yield in Ireland. Okay, Germany is the only one with rising yields at this point in time. So definitely a bit of risk appetite. People are moving away from safe havens like German bonds and going into other assets, at least for the moment. All right, Manish Singh, thank you very much for joining us with your initial reactions. The reaction is that for the moment the worst appears to be over from Greece, but minor irritants will keep coming in the form of Greece having to pass those